Hey guys, welcome to the video. Today we are talking about Beachbody Stock and the price drop that it experienced today on November 15th, 2021. So here you can see that today at market close it was down 3.14%, and then all of a sudden it dropped like crazy. It went down an additional 19.91%. So after hours on November 15th, it is trading at $3.70. So what happened? Basically, the company reported earnings and it was not looking good for the company and the numbers were not good. So that's the primary reason why the stock just dropped. So let's take a look at the numbers and see what's going on here. So first of all, for the EPS, the earnings per share, the company missed that for Q3 2021. They missed the EPS by 49.92%, and also revenue by 15.74%. So for earnings per share, expected was negative 14 cents per share, but the reported negative 21 cents per share, which was even more loss than what people were thinking. And as for revenue, people were expecting 246.93 million, and they reported 208.05 million. So yeah, this is not looking good for the company, and yeah, that was the EPS and the revenue. And let's take a look at the next slide for the assets. So this is from their 10Q report. This is as of September 30th, 2021. So this is from their latest report. Latest report, they have, oh, and this is all in thousands, by the way. So you would just need to add 3 zeros to all of these numbers. But on the sheet, they have just under 200,000 for cash and cash equivalents. But let's compare this to the previous quarter. So this is September 2021. This is June 2021. So before last quarter, they had 347.2 thousand roughly in cash and cash equivalents. So now you can see it did go down significantly. As for their total assets for September, it's a little over 400,000. And back in June, it was at around 481,000. So assets did go down. As for total assets for September, total assets are at 858,000, and before in June it was 915,000. So total assets went down as well. So this is not looking good for the company so far. That was assets. Next, let's take a look at the liabilities. So liabilities for September 2021, total current liabilities is at around 277,000 right here. And for the previous quarter, total current liabilities was at 267,000. So current total liabilities that did go up a little bit, as you can see, 277 now. Before it was 267,000. And for total liabilities, everything combined in liabilities, it's at 333,000 for right now, September, and before it was at 357,000 for June. So you can see that total liabilities, it did go down a little bit, so that is good, and that was mainly due to, uh, I believe it's a decrease in long-term liabilities right here. So long-term liabilities right now, it's at 23.8K. Before it was higher, it was at 26.4K in June 2021. So yeah, that is one good thing about the balance sheet going there. Their long-term liabilities went down. So yeah. Anyway, next slide is the income statement. So this is for September 2021. As you can see, 3 months ended September 30th, 2021. Total revenue is at 208,000 roughly. But if you compare it to the previous quarter for the 3 months ended, this is June 30th, 2021. For 3 months ended, total revenue was 223,000. So 223,000 to 208,000, it's going down. Revenue is going down. And also, if we look at the nutrition is at 108,000. compared to before. Nutrition was at 128,000. So a primary driver of this is their decreased revenue for their nutritional services. That's like their powders and like your consumables, or like the stuff that you eat that they send to you. People are not subscribing to that long term. They mentioned that in their conference call as well. So in their conference call, they said that there's a lot more people sticking to the digital subscription, but when they start the digital subscription, some of them also opted for the nutrition as well. But long term, a lot of people are stopping the nutrition subscription but keeping the digital subscription, causing there to be a slight gap in between the two. So yeah. Anyway, that was total revenue. Gross profit for September 2021, that is 134.9 thousand, and last quarter it was 154.3 thousand. So gross profit is going down. And also for the net income or loss, if you compare this to September 30th, 2020, 1 year ago, for 3 months I did. 1 year ago they were making profit, 13.7 thousand. Now they are down, they're losing money, 39.9 in the hole right there. Compared to last quarter, it was 12.4 thousand. So it's not looking good for their income right now. And I believe that was it. Also, one other thing that they mentioned in the conference call and also on the article that I found out online is that Beachbody has appointed John Michael Furrier. I'm pretty sure I butchered that name, but this guy right here to lead the company's growth globally. And he was previously the CEO of Les Mills Media. If you guys don't know Les Mills, it's also a company similar to Beachbody. I think they have a lot of good online workouts as well. I tried some of them. It's really good. I like them. But I think it's a European company. I'm not so sure, and it's not public. But anyway, they got this guy from Les Mills Media, and then now he's going to be working for Beachbody, and this guy will be overseeing international development efforts across the company. So he's going to help them expand internationally. And before, he was responsible for Les Mills on demand at Les Mills Media. So this guy has some experience in the industry and he knows what he's doing. Anyway, I think he will bring a ton of value to the company and help them grow long term. So yeah. Anyway, if you want to see this article, link is in the description below. Same with a link to all of these statements here. Next is, what am I doing? So right now, obviously, the latest quarterly report, the company is not doing well financially. A lot of bad news specific to the company specific. So what am I doing? So for the fractional shares portfolio, I'm doing the same thing, continuing to dollar cost average into the 16-week mark, since we did not fill our initial investment goal for each company. So even if there is bad news specific to the company, we're just going to dollar cost average our way through it until we hit our goal investment for each company, no matter what. And then once we hit that goal investment, then we're going to start adding to winners and also adding to losers when they're dipping for good reasons. As for the whole shares portfolio, I am just holding it. I am holding it because our initial position has already been filled. We already filled that initial position, and I am not buying the dip because this is bad news specific to the company. I only like to buy on the dip when the stock price is going down and there is no bad news specific to the company. So the earnings report for last quarter, really bad. So yeah, that's why I'm not buying the dip. And even though the company is experiencing really tough times, like their revenue is going down, they're losing money, their numbers aren't looking good, people are not subscribing as much as they were before, I can still see the company getting through these difficult times, especially with this right here. Like they hired this guy to help expand internationally, and he has a lot of expertise in the field since he worked at Les Mills Media, which is a really great company for online fitness. So even though they are going through tough times, I can see the possibility of them getting through it. So I'm just holding. So I still believe in the company. They are losing, but as long as you still believe in it, even if they're losing, just hold it. And why do we do that? Because you want to hold both your winners and your losers, and then you want to let your winners far outperform your losers. And that's because the most you can lose is 100%, but the most you can gain is infinite. So by holding both your winners and your losers, and even if everything except for one winner is like just skyrockets and everything goes else just crashes, just one winner can more than make up for all your losers combined. So that is the strategy that I decided to go with from the start. I am still sticking with that, and yeah, that is the plan for right now. Just hold it. Anyway, next slide. Last one is links in the description. There's a link to the Discord and also the Google Sheet and the Beachbody info that is used in this presentation. For the Discord, I post updates to my portfolios online, and if you want to take a look at the Google Sheet contains all of my portfolios that I've made, and my goal is to outperform the market, do better than average, outperform the spider or the S&P 500 or whatever you want to call it. And so for some of the portfolios, they are beating the market. Not all of them are, but we're in this for the long term, so 3, 5, 10 years into the future. So right now we're still just getting started. It's still the early months, so no worries right now. But yeah, anyway, that was it for today's video. Thank you guys for watching, and I'll see you guys in the next one. Bye.